Justin Pulitzer. This is my midweek video for Wednesday, May 11th, 2022. It seems like every video has just like so much to cover. The news cycles are just so fast and furious these days, but we got some decent amount of material to cover. But first and foremost, if you're interested in DM service, let me know. I have a couple of spots open. Just message me and we could go over the details. That gives you direct contact with me. You could message me about trades you're considering putting on, ones you're already in, how to hedge, where to set price targets, so on and so forth. I find users find that particular service very useful. I keep it very limited because I answer everything myself, and I like to do it quickly and I like to do it thoroughly, so keep that in mind. As far as the macro scene goes, sentiment is finally starting to come in. It's strange to me that it stayed as high as it did for as long as it did, but we did dip into the 30s here, and in the CNN gauge, which is even more current, they're into the extreme fear. I have seen this get to single digits before, so it is possible that there is, believe it or not, still room to go. But rate of change-wise, week over week, it's dramatic enough that I do think we could potentially see a decent bounce, maybe even a multi-day bounce. We're into some levels that I had been looking for, and I think we actually could have seen that rally on Tuesday, but alas, the problem was we opened up. The market opened up, and we were basically right into the prior support level, and, there are a certain group of traders. There's actually people who do entire courses just on this particular type of trading, where you basically play for gap fills at the open. And, given the type of environment we're in, every last buyer or seller is very key. And having those people pressuring the market right away is obviously problematic. In particular, there's been a lot of money being made on the short side. I mean, you're seeing blow up after blow up in big momentum stocks. So I think that that's also been weighing on things. Short seeing up open and they just decide to pound it. But if we open up down, it's hard to, press on lows, I think. That being said, it's hard to play for this, but blow off tops, come from extremely overbought markets, and crashes come from extremely oversold markets. So yeah, eventually, some people pressing lows will be right, but professional traders, people who grind it out, don't usually press on lows. It's sort of, you wait for rallies to short on down tapes, and then on up tapes, you wait for pullbacks to buy. Okay? So that being said, we have a bunch of other macro issues facing us too. We have Ukraine, which is dragging on longer and keeping oil prices higher, although we are starting to see oil prices coming down a little bit, probably because we're seeing, economies teetering on recession. I think at this point recession is basically a foregone conclusion. It's just going to be a matter of how deep and how long it lasts. COVID, they still have the China lockdowns. This is obviously causing huge supply chain disruption. This has been going on for like a month and a half, maybe almost 2 months now. This is ridiculous, of course, but it is hurting the world economy. A lot of people do believe it is by design. You have an increasingly hawkish Fed, although Powell seemed to have capped it again. I keep hearing Kramer, saying that the Fed has to go harder and faster, and is he trying to cause a crash in the market? I don't know what the idea is here. Given the macro backdrop, we've seen this type of problem in the economy before in the 70s, where we had this stagflation. But you had Ronald Reagan, who came in, and he came up with a program of cutting taxes and cutting spending. And at the time, Volcker, the famed Federal Reserve chairman, I think he really was quite frankly overrated, and but was raising interest rates. Here we have the exact opposite right now. We have, well, I shouldn't say a complete opposite, but on the monetary side, we do have a Fed that's tightening. So that's similar, although I don't think Powell is going to go quite as hard and fast as Volcker did. But yeah, Biden, who isn't cutting spending, he wants to increase spending, and isn't cutting taxes, he wants to raise taxes. both of these will cause still further inflation and probably more supply demand problems, because if you're raising taxes, you're basically by design encouraging companies to raise prices on products, right? They have to make that up somewhere, and if they're not going to do it by raising prices, they're probably going to do it with layoffs. If you have 10 people doing a job, doing jobs, you could cut that back to 7 people and then just give the, 3 people, the 30% or so of the workforce that you lay off, that work to the other people, and, they'll do it, I guess. So there's that. And, of course, increasing spending is going to, of course, put more demand on fewer goods, and that's going to raise inflation higher. So the administration's prescription is basically to pour gasoline on a already lit fire, which is becoming a dumpster fire. I think by all measures, things are not going well here in the economy. We're also, again, seeing this disaster of poor market dynamics where we see stocks that report good numbers, think Airbnb, think Booking.com, they pop and, give it all back right away. And then when you see companies that miss, a la Upstart or whatever, I call it Upsta, but it's Upstart.com or whatever it is, they get killed. And you're seeing, blow up after blow up, and it just seems to be, this started with Netflix. So not good. The other things that we do have, I guess, going in our favor, well, I guess one more in the negative column is sell in May and go away, so potentially seasonal problems. It is possible we do see a bit of an early summer rally, but if we do, that usually leads to a late summer sell-off, so just saying. But we do have buybacks that are going to start and probably increase at this point. We do have people getting tax refunds. I just looked through my account and I see I got both my state and federal, which is nice. I always like getting money back. I always hate when I owe money. But there's that. And then I guess you have some of that money that could go into the market, the tax refunds, or people will spend it. So that could go into the economy. So there's that. That could buoy some stock prices soon. All right, so we're done with the macro, I think. I feel like there was some more I wanted to cover, and I'll, of course, remember as soon as I'm done with the video. But if not, I'll cover it in the weekend video, no problem. So, as far as, let's go, I was just looking at this coin, and we'll talk about how to trade that mañana. But as far as the VIX goes, I'm seeing a little bit of light at the end of the tunnel, and we'll see if it's an oncoming train or not. But we're seeing the market make some incrementally lower lows, and the VIX isn't really popping. It's staying right up here at the trend line. Now, I'm assuming we will get some resolution on this fairly early, potentially even on Wednesday. I was going to say tomorrow, but it's possible this video gets up early enough that some of you see it tonight. So we'll just assume when I say, I'll just say Wednesday. And if the CPI number is really bad, we could see a VIX pop, and this could take off. But if the number is crappy, or maybe not as crappy as expected, I'm assuming it to be a crappy number. I think everyone pretty much is at this point. But if we do see the prior 2-day lows get taken out, and a VIX that starts losing, let's say 31s, we could see a relief rally. Okay, so keep that in mind. As far as the 10-year goes, which is, of course, the nightmare chart, it did get into some of the JP levels, and it is starting to pull back a bit, which I think was good. I've noticed TLT and the 10-year starting to back off a bit. I think it just ran too far too fast. And by the way, we got the JP 2 times range. I said I thought that area was a good area to target, and here enough, we got a pullback. To really, I think, get anything going here, really, that's sustainable, we need to lose the 20 MA here, which is at 28.99. So I will set an alert at 28.98, and I'll say row long stocks, if that is the case. So there's that. I was looking at, I meant to do TLT first, but I got too excited with the TNX. So we got down very close to the reference level from the Wayback Machine here in 2018, 1190. When I say that, I mean 111.90. But that got sold a little bit today, but we did see a bounce there. And there is room still further to the 20 MA and maybe even the downtrend line. I think as long as rates are kind of sideways to maybe lower, meaning bonds rally, the market could see a bit of a relief rally, but we'll have to see how that plays out, because this is not exactly the kind of price action dreams are made of. But we are into reference areas, and there is room for still further bounce. XLF has acted very, very poorly, but we are into some reference levels here, some of the ones we had been looking for, 33s. Ultimately, we may get down to 31, 38-ish, but it is possible we do see a bit of a relief bounce here. We could have a potential look below and fail, and I think if we got over 34.44, so 34.45, there's a row long there in the financials, maybe for a rally up to, let's say, the 20 MA at 35.87 at the very least. And who knows, sometimes animal spirits can take on a mind of their own, and we could even get back up to the range high in 36s and maybe even the 50 MA. But let's not get too ahead of ourselves yet. I'll be thinking 20 MA at least for now. JPM has not been acting well, but it is getting very close to the 61.8 and needs to really clear the 20 MA. That's been the resistance. So if you want to, I'm going to put an alert over 123.78. So I'll say row long if we can clear the Tuesday highs, and then I'd see, if we stall at the 20 MA, I might just stop out. But if we can clear that, maybe we get a run back up to even the 50 MA. But the 20 MA has been some resistance, 127s. I even think 125s could be some resistance, but that's yet to be determined. As far as Bitcoin goes, this has been the leader. So if you want to kind of know what NASDAQ futures are going to do, just pull up Bitcoin. Makes sense, either the futures or the actual crypto. We have an interesting primary trend line coming up with the old support, so it wouldn't surprise me to see a Bitcoin bounce, if anything, at least temporarily, and we started to see that here. I would have liked a full move down, so it's possible we get a bit of a rally and then roll over because it wasn't a complete, pullback. Is this enough? Maybe. I tend to be a perfectionist. I'd like to see it touch down perfectly, but if we were to get over 32.615, would I try long? Yeah, I don't see why not. 32.615.01, and I'll say row long. Either that, or maybe a little closer if we get a quick spike down to 28.8. That would interest me for a bounce play, considering it's the reference lows and also primary trend. So, it's a low risk, high reward type setup with a tight stop. We're bombed out here in terms of the money flow. It seems to me like we could get at least a bounce. I don't know if we're going to get all the way back up to the 20 MA, but could we get back up to 34.295 or maybe even 37.479? Yeah, that would line up very nicely. That was the prior support. Maybe we get a bounce there. So we'll have to see. So let's talk about coin. This is the latest disaster du jour, another Cathie Wood stock. She may have to get blown up in her fund to really signal the bottom in all this stuff. But I was looking at a couple of things. I was trying to do a projection of a 2 times range from the IPO high to this bounce low, but it took you into like a negative number. Well, let me just show you. I found it, I don't want to say amusing, but this is how far this thing has come down. The 2 times range, you'd be at negative 13. And we all know stocks do stop at 0. So there's that. But if you take the bounce low to the bounce high, 47.10 lines up as the 2 times range. The 2.618 is still I took it off. It was still a negative number. So how do we trade coin going forward? So if you believe the numbers in coin, it's trading at a very low PE multiple. It's even lower now since the market came down. But as we know, it's not only price, it's also earnings. If the earnings disappear, this is a value trap, and it's actually trading at a much higher PE multiple, which seems to be the case. So let's look at a few things. One, if we draw in a new channel, like if we do it like this, just curious, I just thought of that. I'm like, why didn't I think of that before? That lines up roughly there, 37s-ish, so maybe it overshoots a little, but 47s, 37s, you know, Ziller, Zeller, Zoller. So that lines up in my book. The other way to trade it, and I think this will be kind of the most useful for day traders, is this. Look, we have an after-hours low of 58.12. If that is breached on the downside, you could be short with a stop over whatever the opening 5-minute high is. So there's that. If it happens in the pre-market, just you could still do it and use whatever the 5-minute high there is. But I know many of you will be trading RTH. So if it makes a new low, there'll be a slew of downgrades in the morning, I assure you. So if this loses that low, you got to see wherever it bottoms out in the pre-market, and then I guess you could just use the opening 5-minute range. If you're short, you could use the opening 5-minute high as a stop, or the opening 15-minute high if you prefer. Or I mean, I don't really know if I'd want to press on the lows here, but I mean, you could. If it does lose 58.12, you could use that and use, like I said, whatever the 5-minute candle high is for that move. Or 58.12, if it can't get back up above there, stay short. If it does, you could flatten out. So it seems to me like there could still be a little bit more downside. But what I'm really curious to see is how Coin really handles this, because this is a very widely held stock and it's very, I guess, highly followed. I'm curious to see if this is, just a crash and, continue crashing, or if it actually gets bought up. Because I think that's what we really need to see, is to see that stocks go down on bad news, or they, the moves, either they don't go down anymore or they get bought up. That to me would signal a bottom. And when you get something like an upstart that crashes and, can't really bounce, that's not, and I granted it's still just day one. It's possible, it recovers in the coming days. But, a lot of these are widely held again and probably caused, a lot of pain, and there's probably going to be some liquidation and margin squeezing and all that stuff. So basically, if you want to try long though, here's what I'd be looking for. Either a look below and fail of 58.12, or an open in the market with a higher low, and then you could use whatever the opening 5-minute low stop is, opening 5-minute low as your stop. And then you play long and just keep trailing up stops to each 5-minute candle. Okay? And then, see how high it can rise. If it gets up to, 66, 67, maybe even 68, I'd probably book it. If it somehow fills the gap fill will probably be a sales price and potential short. Okay, so just keep that in mind. But the opening 5-minute range is important, particularly if it's higher than the overnight. But if it's lower than the overnight and you want to be short, you could use whatever that opening 5-minute high is as a stop. And always be on guard for the look below and fail. So very simple. That's how I will be playing this. Gold. Let's go into gold. And you could use that, by the way, that methodology for pretty much any of these. All right, gold. So here we are, right back to the 171.48, which is where I thought it would go. It took a few extra days, but here we are. If you want to try it here, look for either a look below and fail, or a higher low, and then just use whatever that higher low stop is. Gold, is mistakenly looked at as like a safe haven. It's really not. It's sort of a risk-on kind of play in its own right. It's not really a hedge against inflation. And I think the problem is that gold is priced in dollars, and that's what's been crushing it, similar to Bitcoin. So you are making lower highs and lower lows. So, rallies, I guess, to 50 MA or to 176.69 could be shorted, and, the 200 MA here is going to be key. If it fails, we're going to go a lot lower, probably down to 167s, maybe even 164s. But, if we can stabilize here and bounce, could I see a bounce to the backside of the trend at 173s, maybe even fill in this gap here to 175s? Yeah, sure. So, very key spot here at the 200 MA. It's interesting in this market, like nothing is really working, right? Bonds aren't working. Gold isn't working. Bitcoin isn't working. Stocks really aren't working. The only stocks that seem to be working are like the recession plays, and even like Philip Morris and some of these have been getting smacked up lately. That's usually beginning to be the end of corrections, but, when just everything gets killed. As far as oil goes, it stalled on the backside of the trend line, which is what I kind of was looking for, and here we are bouncing down, but it's got to really break the 100 MA. And, even at 95, it's still pretty high. It's roughly, kind of like 100. It's actually 100 right now. And this is still very high. It's hurting the economy. It's hurting, let's say you're a consumer, or you travel a lot, like a trucker or something. If you go into a rest stop, are you more likely to buy the bag of chips and the soda if you're spending $100 on gas as opposed to, 60? That's the thing. If are you going to take your family out to dinner more? Are you going to supersize it at McDonald's, if they even do that anymore? I remember that movie, Supersize Me. It was kind of gross. I wanted to vomit the minute I left the theater. But oil is high, and it's causing problems. Like I said, though, I thought it will have peaked. And you're starting to see that in some of the oil stocks, like Exxon. Could Exxon still go higher? It's possible, but like I said, I think the easy money has been made in these. Could they get, ripped up into the end of the quarter or something? I'd be a little careful. I really would here. It's got to really hold 83. It did hold the 50 MA here now twice. So I suppose over 86, 89, you could try long over the 20 MA, maybe for a move back up. Maybe it even fills in the gap. But I'd be careful. I'd be trimming into rallies for sure. Chevron, I wanted to see a break of the double top for kind of the blow-off move in this, although we may have, an extra blow-off. We already kind of saw the blow-off. And it hasn't been able to clear this 174.76. And it just is now kind of making a little bit of a lower high. It did hold key support here with a look below and fail. We rallied up roughly to the range high. For me to be long Chevron, it really needs to clear the 174.76. I will say this. It is entering kind of the worst part of the end of the money flow here because it is bleeding out. But, if this does get oversold here and the price doesn't really come down much, once it starts coming back up, maybe it does get that recharge. So we're going to have to see. But I'm still of the opinion it's good to book some gains and, rallies onto these oil and gas names. They've run a lot, and there's going to be a need to book some profits. Just curious, I didn't mean to pull up ES like this, but pretty clean look. I mean, you have a very defined head and shoulders here, and we already have a neckline break. I'm glad I pulled this up, but, depending on how you draw on the neckline, it's really more of a slanted neckline, but not a pretty chart. And this was the end of quarter rally markup. I know a lot of people were saying, the Fed, the market likes the Fed. Nope, they didn't like the Fed. They just ignored it for the time being, and they realized that there was money to be made, and then it was, back, after the end of quarter markup. I mean, if you look to the day is really when the, ish hit the fan. So we had this move lower in the overnight, the prior night, and then rallied up right to the prior lows, and then they dumped it. And here we go again. So I think the key for me going forward to say we have a sustainable rally going in ES, the bulls need to clear 40.62 to 40.65 half-ish. So I have it at 75. If we can clear, I think, the Tuesday high, I think we do get a rally. And I think it could rally up maybe even to 4,200. We'll have to see. For sure, I shouldn't say for sure, but I would be thinking 41.54-ish. That was prior resistance, and then who knows, maybe even back up to close to 4,200. The same thing in the NQs here. Opened up right at prior resistance, prior support, and basically watching if we could clear the Tuesday high of day in NQ, and if we can, then I think we run. If not, it's chop to lower. And then if we lose and sustain below the Tuesday lows, I mean, we could just keep going lower. It's just that simple. So we need to clear the Tuesday highs for me to kind of feel comfy with going with a rally. Now, here's a few things. We are oversold in the money flow. We are making new lows with the VIX not confirming. So there is that. We're also into some very key JP levels that we discussed as downside targets, but now we're here, right? So let's zoom out a little. Or zoom in a little. We're right on the JP. It's not even JP. It's just the channel low. Whether I draw it in or not, I mean, it is like, it is what it is. And we're filling in some key gaps and getting to some key reference areas. I had talked about 394s as being the sweet spot. We got that basically in the low of day. Is it possible we get a little bit lower here to fill in the gap to 389s? Yeah, it is. But we've moved down enough into these levels that I'd probably start covering shorts here and maybe even look to reverse for a bounce play. Because remember we talked about volume distributions? That there was nothing here, but now there is a little bit. So there should be some muscle memory, at least for a bounce, or sideways, okay? I'm not saying that we're going back to all-time highs. I don't think so. I think the market peaked, and I think we're going to, keep rallying to lower highs, and it's just going to be, lower and lower, but we are going to get some very big bear market rallies that, people are going to think are viable, at least for a while. Could we ultimately get the 2 times range down to 341s? It is possible. If you want to put on some longer dated trades, the 2019 peak was 339. Lines up very, very well with the 2 times range of the head and shoulders. So if you want to put on some protection, wait for a rally. Don't do it on the dead low. It's sort of, you don't buy, earthquake insurance when, the earthquake is happening or happened. Wait for a rally. Wait for the VIX to get into the 20s. And then, then pounce. Buy like 394s and sell 340s or something, That to me would make sense if we got a rally up, to test back to 410, which had been key support. That area would make sense. Maybe if we even overshoot to the 20 MA. Who knows? Wherever it'll be at the time. But, we are getting into some levels, and I do think into dips it's probably a good area to cover shorts and maybe even look for a bounce play. Now, could we just completely crash from here? Well, we are below the necklines, both however way you draw it, and it is possible. Like I've said, crashes come from oversold conditions, but there has to be, some kind of catalyst. We'll see what that is. Usually they come on Mondays, so, it's not exclusive that it has to be on a Monday, but usually there's, foreboding over a weekend. That's sort of just how it has historically played out. But we are, short term, we are coming into some areas probably for bounce plays. $11.84 is the expected move in SPY. IWM, remember we targeted the 2 times range and the 2019 peak? Well, guess what? We're here. This is where I put in the green zone, sort of like that Matt Damon movie, right? Green zone. Anyone see that? Potential secure low setup too if we have a higher low on Wednesday, and then maybe we rally back even, I would think, to 182s, and who knows, maybe 188s. That'd be a pretty nice bounce. There are still some more gaps to go. I actually wouldn't mind this to just continue to just get oversold and oversold. There are multiple gaps to fill in here, but, is it early in the short? We were bearish as soon as it broke here, and we were talking about shorting bounces. Now I think it's probably, good to start covering into some moves. The 2.618 is 165. That fills in with this 11.6 gap pretty well. So, yeah, I'd probably be covering into down moves here. I think I'd short rallies for sure, but would I be pressing the lows here, or would I be looking to cover into further downside? So my answer is I'd probably, at least short term, be looking to cover into downside, okay? So $6.40 is the expected move here in IWM. DIA. So this one is held up the best, and we do have a potential look below and fail setup here, but we are still below at the moment, okay? And this is when I say below, I mean the February lows. So just keep in mind it's got to get back up over 322.69 and really clear the Tuesday high of 327.61. So 327.62. Be a little careful if we just rocket right up there, because we'll probably back off initially. And then like it clears the second time, then it's go time. Okay? So just keep that in mind. Like if we rocket up here, probably be a little back off. And then if it gets through it again, then, you know, maybe we rally up to the 20 MA. At 337. Its expected move here is $8.40. Now, if the move is down, well, the old Billy Barul, right, from Caddyshack, Billy. So 295.87 was the pre-COVID peak before the crash. So that would be the next kind of big downside here. There are some reference levels in between there, though, but 295s would probably be my big downside target. Now, the Qs, $11.86 is the expected move. So a couple of things about the Qs. Number one, there is plenty of room to still fall in the head and shoulders play. Just saying. But short term, we are into some reference areas, 303.5 to 297.45. There is a channel low a little bit lower in 291s. The 2019 peak is down at 237. So yeah, there's plenty of room to go if we, you know, really do get the crash scenario. And I am still in the camp that we may. Does it have to happen? No. Does it have to happen this Monday? No. Usually you had the neckline break, you'll rally back to the neckline, and then it either fails or it goes. And, you know, it may overshoot a little bit. Sometimes, you know, in the textbook, it'll fail exactly perfectly on 316. In reality, could it go to 325? Yeah, sure. I've seen that happen plenty of times. You know, the market isn't designed to pay you. It's designed to, you know, fool as many people as often as possible and inflict maximum pain. You know, I was thinking about this before I filmed the video. And I was thinking, you know, there are certain times in the market where that kind of thinking is kind of tabled. Like if you were playing a video game, you know, there's easy, normal, hard, and like expert level. I'd say right now we're in the market where we're in like hard to expert. You know, we're not in normal or easy. We're in the harder part of the market. Okay, so just keep that in mind. So we do have a potential higher low here. I think if we got over the high of day here, 305.76, that is a good area to cover if you're short. So 77. Say row long. And you could either use the low of day or the close from Tuesday. The close being, of course, 376 and the low of day 296.57. Either is correct. I'd probably use the close, though. I don't think you need to dip further than that, because the close is also the candle body low. Not to get too wonky on you, but you know, if you have long tails, and we do in these markets, I mean, these candles are gigantic. You know, instead of having $5 ranges, we're in $50 or $100 range. I mean, if the market isn't moving at this point like 100 points a day in the NASDAQ, I'm sort of just like, what's wrong? You know, like are we, you know, like tapping the screen to make sure, you know, is this thing on? You know, like, is this thing on? I'm sorry, I don't mean to laugh, I know, but you know, gallows humor. You know, what was that, James Franco? You know, your first time, you know, being hung. It's not my first time. I've been playing, you know, in the markets for years and years, decades actually. I was around for the .com era. That's where I really cut my teeth trading. I was around for 2008. Obviously, the pandemic, the 2011, you know, interlude, where that was a pretty nasty little crash into himself. If you go to the chart, it kind of looks like this, like a little bump. But we're at some key levels here. If it fails, I think we do go a bit lower. Could we just gap down, or, you know, get all the way down to like 260s? It's not likely, but I mean, you know, it is always possible, you know? So just keep that in mind when you're playing with, you know, position size. But the more likely scenario for me is maybe a little lower, then a bounce, and then maybe a resumption lower. Kind of the market goes in stages. We're down 5 weeks in a row in the market, you know? Usually those things go in odd numbers. So like either we're going to be finished it up this week, or like in 2 weeks from now, like 7, it usually goes in, I mean, could we go to 9 or 11? I mean, then we're playing games here. But 5 weeks in a row, we're starting to see the market make new lows and the money flow isn't confirming. That to me is concerning if I'm short. Okay, I'm just going to say. So it's probably a good idea to cover into some weakness here. Expected move again is $11.86. SMH. This thing looks like, I don't even know what to describe it as, but it's not pretty. But we do have a higher low and a 2-day high. So if we were to clear 230.26, you probably want to cover some shorts if you still got them. And maybe even think about playing long. And what would you use as the stop? Again, just use the close. Very simple, 226.60. Where would I play to? Probably the 20 MA, 236.89 at the moment. That was the last support, 237.32 to 236.89. And if we get there, you probably want to book profits. And I don't know if you want to try short, but you could. And if we got up to 249.35, I would definitely be trying short, because that was that's the neckline. We had bounces here already, and we're breaking down. So, until we're making higher highs off higher lows, it's guilty till. I mean, all these charts look the same. I mean, it's guilty till proven innocence. I mean, you have double tap head and shoulders. I told you, as far as the eye can see. I've been saying this for weeks. I said here, when we got all the way up here, good area to get out. And we didn't even fully get to resistance, which is even, I guess was a sign of being a little bit bearish. But, we've gotten some pretty big rallies, and, we rallied here on the Fed, and now we took out the Fed day low. So, the Fed day low is also a target too. If we get back to 232.45, that's an area to maybe trim a little into. But I think over the 2-day high, I think if we got there, we would get at least to the 20 MA. So just keep that in mind. If we could go a little bit lower here to 216s, but we're down a lot fast. Ultimately, we could go a lot lower. I've shown you the 2 times ranges of all these things. But, do we have to just go straight there? Usually there's bounces to, be sold. Okay. Intel, probably one of my favorites here. We had actually we did have a genuine look below and fail. Now, if we lose 43.50, then the look below and fail fails, and we could go lower, but could we easily rally up to the 20 MA just the same? Yeah, sure. It's a low PE multiple stock. I think it's trading like 9 times. Let's take a look. Let's not cuff it. Let's just do it. 3.32% yield, and we're trading at 7 times PE. So they just reported, so I'm pretty comfortable that those numbers are the numbers. So, we had this, we moved down, they rallied it, and now it was down, and now we're kind of like back into that range. This has been trading, I mean, if we get a crash, the stock will probably go a lot lower, but this has been the reference low for a long time, So just keep that in mind. Avago, let's take a look at Avago. This has sort of been the bellwether for like the best of the best, right? But it still is struggling with the 50 and 100 MA. So probably good to prune the hedges into any strength. If we got up to 614.97, I might even try short there, because that was the last reference high and could be the range high. So key spot here, very key. If you're long, I think you got to use 571.80 as a stop. What's up with NVIDIA? This thing has come down hard and fast. Parabolic move. Not to rib anyone, but I remember certain individuals up at the all-time high saying this thing is going to keep going. And I was skeptical. You might even say skeptical. But we are full of jokes tonight, I know. We are making new lows, but money flow isn't confirming, so I'd be a buyer on a dip, actually. If we got back down to like 147, 152, the 2.618 in the breakout area, you might want to, cover shorts and maybe even try long for a rally up to the 20 MA, which will probably be where it fails again, around 195s to 200s, where it broke down from. So, you consolidate, you break down, you check back, and then we'll see how this is on earnings. Would I be long for earnings after the 50% gap downs we've seen in stocks lately? That is a judgment call on your own. If you ask me, the stock is trading 45 times earnings. No, I wouldn't. If we dump really hard into it, maybe. But if they rally it ahead of time, definitely not. But I'd be careful. I'd rather just see the number at this point, because we've seen where those things, how those things end lately. XBI is now, granted, I had been wrong on it, although I admitted being wrong when it broke here. We're now down to reference lows, and it's probably now, I would think, more of a buy than a sell. And I'm actually going to cover up some shorts and play a little longer here. So I had a long on, but it was hedged, and I'm going to cover the hedge, I think, and just play for long here with a stop below, 62.94. So that's that. Kathy Wood. Oh, man. Oh, boy. Listen, I warned everybody that I thought, and I'm going to just be frank. I told anyone who'd asked, and I even talked about this publicly, I thought she was very lucky. I thought she was in the right place at the right time, and I said I thought she was a little eccentric. I'll just say eccentric. At the time, I said I thought she was a little crazy, to be honest. Just based, I don't know her. Obviously she is a very capable person. She made a lot of people a lot of money for a while. But, she kept on adding to things on the way down, and pretty much everything she's owned in her fund is crashed. She goes about saying she's still outperforming. I mean, what is she outperforming? I mean, the stock is almost back down to where it was. So could it get down to 33? Yeah, maybe. Would I try long there? That's another situation. Maybe for a right or right out bounce. There's no PE here. For sure. Maybe. For 33, maybe there'd be a bounce there. I'd be more interested if it got down to like 19, which is a 2.618 extension. We saw the 2 times range here have a pretty hard bounce. So I would imagine the 2.618 would have an even stronger bounce, probably back to 33. Yeah, so you can see I have alerts set at those 2 levels, and that's sort of what I'm thinking. I mean, it just seems to be blow up after blow up. I mean, every single one. I mean, I think everyone at this point has some stock that's cost them some money on the downside, but I mean, like, every one of hers seems to, like, be getting creamed. You have this inverse ETF, this SARK, short ARK. This had a pretty interesting topping tail today. I'd be very curious to see if this had a lower high, let's say, on Wednesday. And then if you lose the 2-day low here, put an alert here, because this could be a long arc, believe it or not, a long arc play. So 69. If this loses 64.69, I'm going to say row long ARKK, or just short SARK. That's probably the better play, just to outright short SARK, maybe for a move down to the 20 MA. So, yeah, I mean, this is looking a little stretchy here to me. So we'll see. I got people, telling me, SARK is the play. So, I'll tell you a little anecdotal story. I don't want to get too involved, but I remember I forget what year, maybe it was the summer of 2011. And I remember I was out for dinner late night with, this was still in like my club days, with at the time, one of my good friends at the time who unfortunately passed away a few years back. But we were at WOHOP at like God knows what time. And there was some guy at the table next to us, and I don't really usually listen in on conversations, but they were talking about the market. And this guy was basically just like, oh yeah, it's going to be Monday, we're going to short the market. And I said to my friend at the time, I said, that's it. I said, that's the bottom. I said it to him. I was like, I'm calling it right here at, WOHOP at, this time at night and this and that. He's like, you're probably right. He's like, you're probably right. He's like, you're usually not wrong. So, I'll go with whatever you say. And, he had been in, the hedge fund. He was in a prior life a vulture capitalist. This guy, Calvin, he was actually my club doorman for a while. And we were pals. He was a little older than me. Unfortunately, he got sick a few years back and, was no longer with us. One of my best friends, actually. I'm really sorry he's not with us. I'm tearing up a little here. Anyway. So we'll see here, if this is the same situation with ARK. I've had a few people mention to me, Kathy Wood's going to blow up and this and that. So we'll see what happens here. Moving on. So Upstart. Oh boy, this is more like no start. I heard. Actually, was listening to. I usually don't watch Cramer, but I know he had the CEO on. I was curious to see if it was going to be a lovey fest, and Cramer was hammering this guy. And his answers, the CEO, really weren't that great, to be honest. I mean, maybe it's just Cramer, being a little, exaggerated. But he was talking about metrics with this guy, and the guy was sort of like, "No, we're good." But how are you good if your stock is down this much? So I would use the 3-day rule, but if you want to try, it's probably going to make new lows, is my guess. But it's a lot cheaper at 22 than it was at 401. I'm just curious to see. There's no earnings here, right? Oh, sorry. It's still 23 times earnings here. You got Netflix trading at like 15 or 17 times earnings, and I'd feel honestly better owning Netflix than this. So maybe this needs to come down still lower. I think it may, but we'll see. Short term, could it go sideways? Probably. If you clear the high of day here of 38.47, you could probably get some kind of rally, and you'd have to use the close. I don't think I would give 29, almost a $9 range. 33.61 maybe as a stop if we do get a little bit of a bounce, but we'll see. We're gonna see real soon with this, how the market's taking stuff like this. Shopify. Oh man, this was a request. I mean, this has got a 10-for-1 split. I mean, I don't even know if they need to do it anymore, right? Sorry, the stock already split, right? It just went down. So maybe they should cancel split. Anyway, the stock will probably get some, interest in this. I'll be curious to see. I mean, it's back down. It's round trip the entire COVID move. Could it get still lower? Yeah, it's possible. This is another one. They reported numbers. I mean, all fintech just seems to be in the dumpster. And it seems like 90% seems to be the move. So that would imply that this still has more to go. It gapped down here a little bit, and now it just keeps going lower and lower. So if you want to try it, I mean, 305.30 has got to be the stop. I mean, that's the reference low. I'd love to see a look below and fail of that number with like a long tail. Like you get, some kind of whoosh down and then up and then a higher low and then maybe play it. But if it keeps going lower and lower into the 10-for-1 split, it'll probably be some split buyers. So I'd be into it down there. But I never thought I never understood how Shopify got up this high. And I almost feel vindicated because this is one I kind of missed. I didn't really play Shopify that much. I was more involved with other ones like PayPal and Square and those kind of names, which, is okay. But, any rally up to like the 50 MA is probably a short, but down here, it's probably late to be short. Maybe look for, I'm just curious, is Shopify, do they have a PE? Yeah, it's still 266 times earnings. So it's a bargain. It's a bargain down here. So yeah, I'd be a little careful. It's got to really hold that 305 level or else it's going to get smacked up again. Now, speaking of Netflix, I'm really close. I have to tell you, I'm really close to pulling the trigger on this because we're right near primary trend, and we're right near some pretty big reference levels. I did some work on this. I think I talked about this in the last video. If you go percentage-wise, like 140s, I think would be like where it would bottom out. So I'm thinking about selling some put spreads down here. I mean, here's the problem. Our Netflix earnings contracting so much that this really isn't a 16 PE, but it's really more like a 32 PE. I'm giving the extreme example. Okay. If we look on a larger chart, I'm going to show you just how crazy this thing is. The real breakout was down here in like the 130s. So, 118 is the 2.618 of the range, but we're getting closer. I mean, this is the primary trend here. So have we come down far enough that we could start to bounce? I hate the company. I think it's woke. You know, I wish they would get off of that crap. They're alienating a lot of the country. They do have a lot more competition, by the way. But down here, I mean, it's really pretty bombed out. I think if you're going to look for if the market is going to get a bounce, Netflix probably could get back up to like 210, okay? Could it get up to 256, 252? Yeah, that would be my end range, by the way. So if you're doing call spreads and you want to have an upper strike, I would only do spreads in this type of market, by the way. 250 or so is your upper. Let's design a trade. How about we do that? Let's go out to, I don't know, July. I'm just curious to see if we bought, like, let's see, 185, and we got to go out to all, and we went out to, let's say, 250. It's not going to have a ton of juice. Let's say we wanted to do, let's just do $50 wide. You could do that for $7. I mean, you'd miss a lot of the rally up to like 200. That's why I'd want to do it a little bit closer. So maybe we're a little less ambitious. Let's say 185, and we only want to go up to, I don't know, 230? We'd probably, I'm just curious to see. 230 is not a high delta. So, yeah, 50. Yeah, that's not bad, actually. That's 250. Sorry, 250, 230. Yeah, it's not too bad. I mean, if you don't mind spending a little extra, you could do 250. I mean, if it goes against, you could always roll it down. So 250 could, like, you know, I mean, if this really starts, like, tanking or whatever, you could either just stop it or even roll it down right, you know, down to 200 or whatever. So I'm just curious if we went back to the chart, if we were playing, let's say, just back to, yeah, wow, that'd be a big move. Yeah, that's what I'm thinking, like 252, because that was sort of like the after hours low before the extra dump. So if you want to play like a call spread there, I mean, even at the most extreme here, let's go back up to 250. You're only paying $13, you know. I mean, so, and if you get, you know, a little break in the VIX, that could work. I mean, if you want to really play Mr. Market here, I mean, you could short, like, let's say 150 puts and buy 230 and get it on for super cheap. But I'd rather just do the call spread at the current time, and maybe if it starts rallying, maybe then do the call, you know, do the puts. I know that sounds a little counterintuitive, but I mean, let's say we wanted to play ultra conservative here. We wanted to sell, yeah, I guess 130, 120. It's only $1. See, that's the problem. I don't really want to sell the puts here because it is trend, and if that gets lost, I do think we could come down lower. So you could do, I mean, if let's say we put a stop on the puts, we could do, let's say, 150, 130, and then if we start losing the trend, that makes some sense. And then let's say we buy 185, and let's just do the conservative one, sell 230. You know, you could get that on for $8. It's not a bad setup there, right? So I like that Netflix play. All right, moving right along. Disney is going to be a big one for the market, I think. I'm hoping this gets its butt kicked down to like the 80s, because that I think would be a screaming buy on Disney. It's still a very expensive stock. I mean, if you look at the multiple here, it's still pretty high. It's like 64 times earnings. So there's room for Disney to get smackarooed. It's down to the 61.8. I mean, sorry, the 78.6. So it's probably a little late to short. And we better go back to the dailies, by the way. So I don't know if I'd want to be short into the number, given how weak it is. I will tell you, if it does rally ahead of the number, there could be a short opportunity. But, you know, Disney is Disney. What's the expected move here? $10. Wow, all right, so there's going to be some movement there. It's bombed out in the money flow, but again, I'd rather be a second mouse, because I do think that I'm waiting personally. If there's another move lower, I'd be a buyer at Disney for a bounce. But I don't want to be long here, into the number. I think their theme park numbers will be good. I think their Disney Plus numbers are going to be a problem, and we're going to have to see how the market sorts this out. So Disney could be a bellwether here on how the market trades, but a big dump in this, I'd be a buyer. And I hate Disney. I hate their management. I don't like their woke nonsense. But check out Airbnb. This is one of the reasons also why I'm a little careful to be long Disney. This was a travel stock. Obviously, it's a disruptor also. And they rallied it on the number and then took it all back. And now the stock's almost down to it's at an all-time low. Amazingly enough, even after good numbers, and close to the channel low. So actually down here, maybe right here or maybe a little bit lower, I'd probably try it for a bounce, maybe back up to 130s, maybe 135 to fill the gap. But I'd like to see a higher low, let's say on Wednesday, and then use that higher low as the stop. But yeah, we are getting to the channel low, so it's probably a good area to cover if you're short, and maybe a good area to buy the dip. Apple, I'll tell you this I was talking to a DM subscriber today, and this gentleman was asking me if if it's time to press the lows here, and I said I don't think so. I'd actually cover and put in lower stops basically for shorts, and that turned out to be the right call. But for me, to see Apple really to see the market really take another leg lower, Apple's got to lose 150. All right, that was the last reference low. That's the channel low. It was the old breakout here. So Apple, for me, if we're gonna if we're gonna do this thing, the market's really gonna go lower, Apple's got to lose 150. And I'm actually gonna put an alert here, and you're gonna like this alert, right? So 149.99. Kind of like the price of the old iPod Nanos. Remember those things? At or below, I'm going to say row short, either Apple or Qs. Okay, so if we break there, particularly after a little bounce, then I think we got some, then we got some stuff going on. Because of the 2 times range, the 2.618, if we're going to go there, I wasn't planning on going there, but let's go there, is down at 142. And I think that the ultimate low could be down here closer to 137.98, which was the old all-time high. So if you want to do an Apple short, let's go out to July again. That seems to be our go-to area. You can buy the 150 puts, or if you're long and you want to put on a hedge here and sell 135. Or if you don't mind paying a little bit more, you could do 130. And for $5, you got yourself $20 worth of downside coverage. And if you don't want to pay all that, you could sell 170 has been a resistance area. Sell the 170 calls against it. And for $1.80, you got yourself $20 worth of downside protection, and you got yourself $16 or so of upside. So I like that as a hedge. These are all DM service type of things we discuss. All right, Amazon, 1,050, 1,035. That was the big breakout area. Could we get the 2 times range down to 1,600s? It's always possible, but we do have the split, the 20-for-1 split, and unlike Shopify, Amazon still has a lot of meat on the bone for the split. I think it's a little late to be short Amazon. It's bombed out in terms of the money flow here. Rallies probably still can be sold, but coming into the split, there's gonna, particularly if we keep coming down, it'll be I think a buy the dip opportunity. Does anyone know if Joe Terranova called it quits on this yet? Because I know he tried that. Him buying the dip here kept me out of it. I was like, if this guy's buying it, I'm sold. So I know that sounds terrible, but you know what I mean. People were trying to call the bottom and buy dips on things, too soon. So I want to see these people throw in the towel, and then Terranova plus 5, or whatever, plus 5 days or whatever. But we are coming into some reference levels. I actually have some buy orders in at around 2,000, because this is the next big area. So if we could get down there, I'd be starting to nibble small, and I don't know that I'd be keep on adding, but if we got down to like 1894, 1895 area, I'd be adding, and then maybe closer to 1600. Quarter, or quarter, half. So you'd be at a full position down, close to 1600. So that's how to do it. Costco. All right, so this was a requested name, but I was going to cover it anyway, so that worked out very nicely for us. I don't know what to say about Costco. I mean, it's a very well-run business, but it kind of became a pandemic play. It's oversold here. The chart looks crappy. We have trend breaks. The big breakout down here was like 469. So if we got down to there, maybe I'd play it for a bounce. Ideally before earnings, and then you get a rally before the number. So that would be interesting. But we did have a kind of a look above and fail situation, and it's just a bad time to be any stock right now. And this one, I think, benefited from the pandemic, and there could be some more downside. I'd be using rallies in Costco, particularly to the 50 MA, to get out. I wouldn't, I'd buy it lower for a bounce, but I'd be selling if we got up to the 50 MA. Very simple. Someone asked me to do dealer's choice, I believe. My buddy Dave, I think, put this one out there. But, and I will just do this because we're, it's easy. It's another retailer. Target lower high, and they do have earnings coming up, and this has been one to get clobbered before on earnings. So I'd be careful. I don't see any reason until we're rewarded for buying dips, okay? And we see rallies that hold. I mean, why? Well, the downside in this, let's say, is, 20 or 30 points. I'm just curious. I don't want to just talk out of my ass. What's the target earnings numbers they're reporting? Yeah, 20 bucks. I was going to say 20 or 30 bucks, so I wasn't quite talking out of my ass. All right, I always say if you go to a bar and you have a good bartender, they can eyeball it. They don't need the measurer, and I guess I'm a good bartender. I can eyeball it. So 20 bucks on the downside move, maybe 30 or more if we get an outsized move, and then maybe 20 on the way up, and you're back up to the downtrend line, where you'd probably get sold. So if I were in the stock, I'd have some, hedges on, maybe for the downside potential. And then, I'd sell some calls up here. Same week expiration at like 250. Or I would just set orders up there. I'd probably even start, 250-ish. Okay? Don't, be greedy and go for the full tail. Just, the round number, 250-ish. So I'd wait for the number. I really would. I just don't see the need to be a cowboy here. For a trade over 228.75, yeah, you could play long for a bounce. Maybe for a move back up to like 238. But again, I'm waiting. Second mouse has been the last two earnings seasons, has kept you out of the, out of the woodshed. Google is also another one with a split coming up and a high enough dollar stock that this is going to matter. It's near the channel low, so I don't mind buying the dip. I do think 2,500-ish is going to be some resistance now. If the market, continues to be weak, could Google continue to bleed out a little? I mean, yeah, this is cheap, though. I think it's only like 20 times earnings. Let me see. Google, 20.7 times earnings, and I do believe the Google numbers. And if they do come down, they're not going to be catastrophic. So could this get down to 1900s or, maybe even down to the 1800s? It's possible. It just depends on the tape. If the market rallies, I think Google will rally with it. And if the market's weak, Google will be weak. But I almost view Google as a bit of a safety play because, could it get down to 15 times earnings? It's possible. We're at 20 times earnings, though. It's not like this thing is trading like 64 times earnings or something. So Google probably wouldn't be the first place I'd go to look for shorts. Trade desk. This thing got walloped, right? I told you a while back. I remember in one of the last videos someone asked about this, and I said that they have a deal coming up that's expiring soon with Google, so I probably wouldn't be into this thing. And I don't know when that triggers, but This thing looks pretty bad. I mean, if it gets back up, I'll tell you with this. If you could clear high of day for a trade, I'd do it. 47.20, so 47.21. That would be a look below and fail scenario. Row long. What would be the stop? Not below a day. Not for me. It wouldn't be. It'd be the close. 43.75. Where would I play for? Basically, a move back up to 55. The last support. So, barring this was a look below and fail. So could we have another look below and fail? That rallied up quite a bit. So, yeah, maybe. We'll see. But if you stay below 47.71 and keep going, I mean, this could get to the channel low very easily, down in $30, which is really where it broke out from. And could it even get all the way down to 13? I mean, I don't see why not. That would be basically the 90% retracement that all these stocks seem to be doing. So, very key here. It's got to get over the high a day here, or it goes lower. Facebook. This one just reported they were down big into the number, and it rallied, but it's been slowly giving it back up. I actually have a put ratio on playing for the gap fill. I actually got burned a little into the number because of the the move was just, it was down. I did the same trade, but it was just down too hard, too fast, and then the premium for the puts got jacked because of the earnings. Like, it caught up on me. I had time not going fast enough for me, and then they had that pre-release, non-release, and I got out of the trade, and it cost me some bucks. If I would have just left it on, I would have had a break even or a winner even. But now I have it back on, and we don't have earnings right away. So if this does continue leisurely or even quickly pulling back here, that'll be a big winner for me, and it'll more than make up for the last faux pas. But would I be a buyer down there? Yeah, probably, because it would be channel low again and the gap fill. So money flow is definitely not confirming the pullback, though. I think people are hiding out in Facebook. Why? Because Facebook is freaking cheap. It's, 13, 4, now it's almost 15 times earnings. So that area, like Netflix, seems to be gathering some, I think some support in these momentum names. Now, I want to just say overall in the markets tend to overshoot on multiples to the upside and then overshoot on the downside. Markets, like bear markets, don't usually bottom until 10 times earnings, all right? Where I think we're currently like 16 or 17 times earnings. We'll see. You will have buyers at around 15, though, at least initially. Let's end on Tesla. So I was chatting it up. She always chats me up, and I always tell her she follows too many people, because she's always like quoting me stuff, and it sounds sort of like me, but I know it's not. So just follow the Tekadon here, who talks about is the levels bay. Like Salt Bay, I'm levels bay. So we're down to the 78.6 of the range. Listen, what's weighing on Tesla is a couple of things. One is the multiple. I mean, do I need to tell you that Tesla is not trading at 15 times earnings? It's 108 times earnings. So that's a problem. It's also a Cathie Wood stock, which is another problem. And you got the overhang of Musk potentially still having to sell shares. If Tesla keeps going down, does he have to sell more shares for the Twitter deal? Now, Musk said he thinks he could get the deal done like in the next couple of months. That's probably when it's time to buy Tesla, once the deal is done, because you won't have that, overhang. So just saying. I know a lot of people think the deal won't go through because, Twitter is, not going much higher, and it's got a healthy, I guess, premium still to where it's trading. But I think that's just because the fear is that if it lingers on, the longer the deal doesn't close, the more probability it is that it doesn't close. And the downside, rather than being, 10% or 15% up, is probably like 50 or 60% down. Would I be a buyer at like 39 where it filled the gap? Yeah, maybe. All right, so Tesla. I think you could try it here. I'd be more of a buyer if it got down to 700 again, that reference low. But, down, is it a short here in the set with a 7 handle? I don't know. I'd be more of an interested short if it got back up to like, 950 or even 970. I mean, 900, by the way, was like a big level for this. So between 900 and 926, maybe I'd be an interested seller. Down here, it might be a little late unless the market is terrible. I'd love to see Tesla just come down and do like a perfect pirouette or even a look below and fail of 700. And then if it does that, maybe sell like 500 puts. That's the reference low, like 550 or so. So yeah, if you want to sell some out of the money puttage or do some kind of put ratio, if you want to play for it, how about this? Buy like 700. I don't know if I want to go out to, let's just do June for now. What if we bought 700 puts? Sorry, I know the video is a little long, but you know, you're getting some A+ kind of stuff here. It's still a debit. I don't like to pay the debits. Would I do 3? I don't think so. Let's lower it a little bit. I'm raising it like a moron here. 650? 640, 630. We'll get it eventually. 625 isn't trading, so 620. Yeah, maybe that would work for me. You'd still, those 620s would get some juice if this came down $100. I mean, it wouldn't be a gigantic winner, but you know, you'd have something in the bank for sure. And you're being paid to put the trade on, right? Being paid $1. So yeah, I don't hate that. I'd be just careful with the time, or if you just want to wait, I mean, just wait for it to either. How's this? Long over 825.36 for the gap fill, and move back up to like 869, 870, maybe even 900, or just wait. I'm sort of in the wait and see camp here. So have a great rest of your week. I'll see you for the weekend video. If you're interested in DM service, message me. I have a couple of slots open. Cheers.